Hi everyone, and thanks for joining us today for our webinar, Preparing Kids for Their Financial Future. Before we begin the webinar, we'll just go through a little bit of housekeeping. This webinar is being recorded and the slides will be sent to you next week. We encourage you to ask any questions you have throughout the webinar, and please put them into the chat box, and Liz will endeavour to answer them at the end of the webinar. And if you're posting to social, please make sure to use hashtag NetwealthInvest or tweet at NetwealthInvest. And this webinar is general advice only. And now I'll introduce you to Liz Phelan. Liz is the Australian Operations and Sales Lead at Banqer, a company that offers a digital financial literacy program that turns a classroom into a virtual economy. She's passionate about early financial education and is proud to be working to support its implementation in classrooms and advocating for its inclusion in the national primary school curriculum. And I'll now hand it over to Liz, and she'll explain a little bit about her presentation. Thanks, Liz.
Great, thanks, Leah. Welcome everyone, and thanks for joining me today. As Leah said, my name's Liz, and I'm going to be talking on the subject of financial capability in Australian youth. Starting with the important distinctions between literacy and capability, and then we'll take a quick look at the current context in Australia in terms of both financial education and capability, and then I'll spend the bulk of the webinar introducing some practical ways in which we can actively develop knowledge and skills in youth so that they're adequately prepared for their financial futures. So we'll just start with some introductions of the Banqer team. So as Leah said, I've got an entrepreneurial background, have built and exited a small business, and for the last year have been working to introduce Banqer to primary and middle schools in Australia. Kendall, our CEO, is a former accountant come software developer, and in 2014 she decided to develop an online education platform based on a very successful classroom economy that her younger brother's teacher, Micah Hockard there, was running in his classroom. So he'd been refining this classroom economy and the financial literacy lessons aside it over a period of 10 years, running the economy using spreadsheets, contracts, and a calculator. So it was very sophisticated and effective. However, it took a lot of time to manage, as you can imagine. And so Kendall offered to create an online platform to make it easier for him to manage and more relevant for the students who, of course, live in a digital world. So Banqer was trialled in Micah's classroom back in 2015, and it's now used in over 40% of primary schools in New Zealand. It's a tool that enables teachers to simulate financial experiences for their students, providing them with a safe environment to experience the ramifications of their financial decisions. So each student has their own mock online bank account where they can earn, spend, save, and invest. And then teachers start by launching a basic economy with the income, expenses, and interest, and then they unlock the modules to introduce new financial concepts like taxation, superannuation, personal loans, and insurance. But I won't go into it any further right now, as we'll take a closer look at it later in the webinar. But before we proceed, I do want to encourage you to ask questions throughout, and I'll either pause to answer them between slides, or we can come back to them at the end of the webinar. So don't be shy. So what is going to be fundamental to the conversation of financial education is the question of when. So what age should we start? There was a study conducted recently by the Cambridge University and the OECD to determine exactly this, and the findings are really important and need to inform curriculum developments because by the age of 7, attitudes towards money and financial habits are typically set in place. So I've got the quote there from the report. Development and integration of financial habits and attitudes begin very early and probably before a child turns 7. So clearly, if we're going to produce financially competent adults, we need to start formal financial education as early as possible, which would demand its inclusion as a learning area in the primary school's curriculum. We're clearly advocates for this at Banqer, and Banqer is designed to make it easy to integrate financial learning into the primary school classroom, and the fact that it's web-based and free for use removes all the obvious barriers to make it accessible for all, regardless of location and socioeconomics. So many of you will know the answer to this, but essentially the difference between financial literacy and financial capability is the difference between knowing that we shouldn't purchase an expensive coffee every day and still doing it. So the knowing pertains to our literacy, which may be sound, and the doing pertains to our capability, which in the same person can be very poor. So financial literacy is just the first rung of the ladder, and we need to be focused on building both financial knowledge and capabilities in our kids. This pyramid encapsulates financial capability in its entirety. So you see that literacy is foundational. We must have the knowledge to make good decisions, and then we must be able to apply that knowledge and experience the outcomes, whether they're good, bad, or ugly. And it's from that experience that we develop our attitudes and behaviour. And the final outcome is our financial capability. So as we know, attitudes and behaviours start to set around 7 years of age. So we need to start introducing financial concepts early to develop our kids' knowledge, and then give them opportunities to apply their learning and experience the ramifications of their decisions. So in the slides that follow, I'm going to suggest a number of ways in which we as parents can kickstart our kids' financial education at home. But before we do this, let's just take a quick look at how Australian students stack up against the rest of the world when it comes to financial literacy. This was a survey done of close to 15,000 15-year-old Australian students, and they were tested on their financial literacy and its application. And as you can see here, we just scrape above the average with a mean score of 504 versus the OECD average of 489. This isn't exactly a result to be proud of, but what's really alarming is that as a collective, the OECD countries that participated in this study underperformed. So the top score was 566 out of 800. And an additional blow is, and it's not represented on this graph, is that our performance actually dropped as a nation from 4 years prior. So, look, with financial literacy directly related to future financial prospects, we clearly have a lot of work to do to ensure the financial stability of our future generations. So, without further ado, I'm going to offer some practical suggestions for parents to build foundational knowledge early and create opportunities for their kids to apply their knowledge and experience the positive and negative outcomes of their decisions. So building the foundation, kids are starting to grasp basic concepts such as value and exchange as early as 3 years old. So we need to harness their natural curiosity to impart important lessons such as where money comes from and why we need it. The more open and honest you can be with your kids at this age, the better. Explain to them the nature of work and its relationship to your family life. Kids are being heavily marketed to, so it's vital that you reinforce to them the difference between needs and wants and the importance of budgeting, saving, and good decision making. Explain the reasons behind your financial choices so that they develop an understanding of these concepts and the different types of value. For example, nutritional value, environmental value, and social value. And as we move towards a cashless society, having notes and coins on hand is really important. I'm not suggesting that you pay for everything in cash, but make sure you do so frequently. And then when you do use your card, as an exercise, at least once, place the cash aside the item that you're going to be purchasing and say, today I'm going to pay with this card, and it's exactly the same as paying with the cash. Explain that your money is kept in a personal account with the bank, and when you tap your card, that money is moved from your account to the account of the business that you're purchasing from. So to follow the principles of the financial learning pyramid, we must create opportunities for our kids to apply their knowledge. So preschoolers can be given a piggy bank with sections for saving, spending and sharing so that they can experience and understand the different value that each option has. Allow your child a small amount of money to manage each week, and the sharing jar could be where they draw funds to buy their friend's birthday present, for example. Opportunities to develop their understanding of delayed gratification include having a family jar for them to choose to contribute some of their pocket money to, and it can be used to pay for family outings such as picnics, movie screenings, holidays. Your kids are going to have much more appreciation of the things that you do as a family if they feel that they've contributed to it. And for young children, a great book published in Australia by Money School is called Bunny Money by Lacey White. It tells a compelling tale of two twins with very different attitudes to money and what happens to their savings over time. I highly recommend that one. All right, so there will come a time to transition from the piggy bank to something a little more sophisticated and reflective of the way that we use money as adults. And thankfully, there's now a tool that safely provides this experience for kids, and it's called Spriggy. Spriggy is a debit card for children aged 6 to 17 years old, and it functions like a regular debit card, except that parents have ultimate control. So they can transfer money onto the card, they can set an allowance, receive notifications as their kids transact, and they can lock and unlock the card at any time. It's a great stepping stone for tweens into using online banking. They're susceptible to all of the online consumer traps, but because it's completely transparent, parents can see and address mistakes immediately and reinforce the learning that their kids are doing. And another great feature of the app is the visual savings goal. And we recommend that you encourage saving by simulating interest for your kids. So, for example, every $100 they earn, they may receive an extra $5 from you. Another locally developed tool is Pennybox. This allows parents to enter chores with an associated payout price so that kids can perform tasks for payment. Both the parent and the child have the app on their phone, and they can remotely manage their pocket money this way. And it's also linked to other accounts to create a community where kids can follow their friends and they can observe one another's progress. It's not connected to a bank in any way, so payouts will have to happen externally to the app. Like Spriggy, Pennybox is enabling an important financial experience, which is being paid money for the value of work that's been done. It will develop responsible behaviours as it demands kids perform tasks in exchange for pocket money rather than it simply being given to them. It's an introduction to employment, and parents can get creative and draw up contracts that describe the tasks involved and the standard of work expected. And it's also free on the App Store, so you won't need a promo code for this one. But with Spriggy, you can see there, if you use the Banqer code, the promo code Banqer, you'll receive a $5 discount on that. So in my opinion, for younger kids, I'd love to see a Pennybox Spriggy combo, wherein kids earn the money via Pennybox, and then once a week it's cashed out to their Spriggy card. For older kids, Spriggy alone might be more appropriate, as they'll hopefully have a part-time job outside the house and continue performing their responsibilities at home for a fixed weekly rate. So an exercise that we recommend that you run with your children to help them understand adult financial responsibility is to draw up a spreadsheet to include all of your household expenses, including those relating to the children, so that they get a sense of the magnitude of household expenses and understand the need to budget in order to uphold all of the payments that need to be made each month. For full transparency, you can add your household income and get your kids to do the maths to see how much is left over each month. No doubt it'll be a big eye-opener for them and give them an appreciation for the work that you do to keep the household running and their needs met. And a fantastic book that I recommend to teachers, but also friends and anyone else that I engage with on the topic of money, is A Critically Compassionate Approach to Financial Literacy. Its message is really refreshing, it's logical and empowering. And in a nutshell, it's that financial practice can only be fulfilling if it occurs in a manner consistent with our values. It's a very simple truth, but it can be easily lost amongst the thousands of commercial messages that we're bombarded with every year, and it stands in opposition to the conventional approach to financial literacy that positions wealth accumulation and material possession as the desired outcome. And for parents wanting to challenge their kids to think critically about our economy, there are dozens of fantastic exercises embedded throughout the text, so I highly recommend that one. And then there are the Money Smart resources. So these are developed by ASIC. Money Smart is an extremely comprehensive site with a suite of tools and resources. It's unbiased and free, and ASIC have done a really great job at minimising the barriers so that the majority of their resources can be used without devices if need be. They've got storybooks, worksheets, activity and more, and their content sits firmly in the literacy space. So it'll help you understand the concepts behind your behaviours and then impart this information onto your kids. And as your children move into their teenage years, it's going to be important for you to enable them to take control of some of their expenses. So we suggest by starting by giving them a budget to manage each week and enforcing the principles of budgeting by not giving them any extra if they blow early and don't have enough on the weekend to go to the movies, for example. And herein lies the crux of any education. Often the greatest learning is found in failure. So you really do your kids a disservice when you don't allow them to fail and face the ramifications. As your kids develop, you can add more financial responsibilities until they're eventually charged with paying all of the expenses related to them. Apps like Pocketbook will be great to help them track their payments and manage their budget. And by 17, they should be contributing to the household bills, managing their tuition and extracurricular fees, and earning their own money to support their hobbies and social life. And don't discourage them from getting a crappy job. They build resilience, important skills and connections. And now I'm just going to finish up by introducing you to our financial education platform Banqer. So as mentioned before, it's a digital platform for primaries and middle schools that's proven to improve financial capabilities in students. The last time that we measured in New Zealand, financial capabilities improved by on average 40% from using Banqer. So it's certainly an effective learning tool. It enables teachers to establish a mock online economy and for students to transact with one another and the Banqer. It's designed to be super easy for teachers to implement. It's highly engaging, obviously very relevant for students, and it's completely free to schools thanks to our partners Netwealth. So the basic economy is established by enabling the income module and getting students to set up automatic payments for their expenses. Common expenses that we see are desk rent, chair rent, Wi-Fi, power, and it's often a really fun time at brainstorming those with the class. So students, once they've receiving the income and have their expenses set up, will see their incoming and outgoing payments in their transaction history, and they can also set up a regular transfer into their savings account and are encouraged to do so in order to benefit from interest. So they'll see the growth in their savings with compound interest and develop an inherent understanding of how it works. Students experience the challenges of managing money, and if they don't budget carefully, they may find themselves heading towards debt and having to apply for an overdraft to avoid the higher fees of an unarranged overdraft. Teachers can enable the modules at their own pace and with a click of a few buttons. By enabling the taxation module, students' entire income, including their salary, basic income, and payments from other students or teachers, will be taxed depending on what bracket they fall into. tax and interest debits occur on a weekly basis in Banqer, and this is to reinforce the concept for students. When students have saved enough for a house deposit, they can apply for a mortgage, and if it's accepted by their teacher, then they'll be able to access the property market and search and buy and sell if they want to take advantage of any growth that occurs in the market. As with all modules, teachers can adjust the settings at any time. And we recently had a teacher who dropped the value of her housing market to simulate the current housing market fall in Sydney. Students, of course, were very surprised to find that they had negative equity in their house and learnt a good lesson. No investment is a sure bet, and even the housing market, which is considered safe, does have its risks. So when purchasing property, students will be prompted to purchase insurance at the same time, and those that don't will suffer the consequences when their teacher simulates the disaster at the end of the term. So that's a really fun module, and one of the favourites that we have. We also have a superannuation module. Superannuation can be introduced along the way, with the teacher or employer paying out 9.5% of the student's income to their super account, with students deciding between a low, medium or high risk fund manager. And again, this experience is simulated by Banqer, and dividends are paid into the super accounts according to the performance of their fund. So those that choose a high risk fund will get a shock in week 2 when their fund underperforms and debits their super account. And then teachers can unlock super accounts and simulate retirement at the final term, cutting all income to students and having them uphold their other financial responsibilities, of course. We've even heard of some classrooms hosting a retirement muffy day in New Zealand where kids come to school dressed as their grandparents. So these are just some of the features of Banqer, and there are others like term deposits, charity donations, and we plan to launch some more modules in Australia next year, starting with personal loan and credit score module. This slide is just to give you an idea of the look and feel of Banqer. It's designed to be reflective of our online banking systems, with plenty of reporting in the form of aggregate graphs and charts for students to gain deeper insight into their financial behaviour, and for teachers to follow their students' progress closely without it taking too much time at all. So I hope I've given you a good sense of how Banqer operates in the classroom to engage students in financial learning, by providing them with a multitude of experiences and opportunities to apply their knowledge in decision making and see how those decisions play out in comparison to their peers. It's a safe environment for kids to get creative with their money and to understand the complexities and challenges of managing money and achieving financial freedom. Well, thanks for your time today, and I hope this has been useful. I will provide some notes and the slides so that you can refer back to the suggestions and any of those that resonated with you. And we do have some time, so please, if there are any questions, just fire away and I can answer them for you.
Thanks so much, Liz. We did have one question come through. How many schools in Australia are currently using Banqer?
Almost 200, and then there'll be a number of classrooms often, so sometimes between 3 to 8 classrooms using Banqer at those schools.
And how would they get them into their schools, or anyone listening? So
we will have, and I'm sure we can put a link to it from this webinar, there's a page on our website where parents or anyone in the community is able to refer Banqer to a teacher that they know, or an administrator at the school, or principal, anyone involved or working in the school environment. We also have a relationship with the Financial Planning Association of Australia, and a number of their members are actively trying to introduce Banqer to their local schools. And I'm here on the ground heavily promoting it and trying to assist it into schools as much as I can.
Great, thanks very much. And that's all the questions we've had today. Thanks so much for your time today, and thanks to everyone who's listening. We hope you can join us for our next webinar next month. Thank you.
Thank you.